Welcome to Today Breaking News. Here's a highlight of the day. Explain now why the euro fall below parity versus dollar matters. London, July. Europe's single currency has dropped below parity against the dollar for the first time in almost 20 years, battered by growing recession fear in the euro area. On Wednesday, it slumped to as low as $0.9998 and down almost 12% so far this year. It started the year on a strong note before the war in Ukraine fueled inflation and hurt the bloc growth outlook. Since its birth in 1999, the single currency has spent very little time below parity. In fact, the previous time it did so were between 1999 and 2002, when it sank to the record low to $0.82 in October 2000. A euro banknote within his relatively short two-decade history, the euro is the second most sought after currencies in global currency reserves and daily turnover, and the euro dollar is the highest among currencies in the global 6.6 billion. Analysts say that until the economic outlook improves, the euro will remain in the doldrums, even if the ECB hike risks the Fed hiking by more, lowering costs into the United States. The euro could also be hurt by fragmentation. One favorable factor of the euro is that shorting the currency is already a popular trade in currency markets right now, and bearish positioning is approaching historical level. That might a big headache. Letting the currency fall would push up already record high inflation. Rising is the risk of price growth becoming entrenched at the rate well above the ECB targets of 2%. Studies frequently cited by the ECB suggest that a 1% depreciation of the exchange rate raises inflation by 0.1% over the year and by up to 0.25% over 3 years. The ECB has so far played down euro weakness, arguing that it had no exchange rate target, even if the currency does matter as part of the wider inflation calculations. The euro has slumped almost 12% against the dollar so far this year, but on a trade-weighted basis against its trade partner currencies, the euro is down only 3.6%. To prop up the euro, the ECB could signal more aggressive tightening, including a 50 basis point rate hike to September and further moves in October and December. Analysts reckon a more hawkish stance is unlikely given the deteriorating growth outlook. Thank you for subscribing our channel. I see you in the next newsletter.